Alright, and one more guest. Mr. Edmund Lee, managing partner of Q18 Capital.
We got quite a full house up here today. Should be a good discussion. So let's get right to it. Cryptocurrencies are down almost 90% from the high. Why should anybody take this seriously as an asset class?
Well, I think it depends on what you mean by cryptocurrency. So the traditional cryptocurrencies are way down, so that's true. But if you're looking at the whole asset class in terms of crypto, no, they're not all down, and some of them are actually quite stable. Some of the asset stable coins, and some of the ones that are backed by real businesses, they're it's a crypto asset class. I would argue they're not a new asset class. It's a new form of settlement and transacting in a traditional asset. So I think we need to be very careful about when you say, are you into crypto? I think you need to say, what do you mean? Are you into the traditional, real cryptocurrencies like Bitcoin and Ether, or are you into other crypto assets which are more of a traditional form in the conventional business world? So be careful.
What do you guys think?
So as the equity finance guy here, one of the conundrums we've dealt with for some time is, if you think about the early iterations of crypto in terms of ICOs, how do you value them? They're often a structure where the developers who create a platform raise money, which is described as a prepayment for service, not a stake in the venture, and it's not clear what the cash flow structures are or who owns what. So ultimately, where there's no clarity around that, we need to be open-minded that those specific structures in their current form are worth zero. However, if you restructure that same entity with the right governance structures and a financial model that can make sense to investors, then the same entity that could plausibly be worth zero could be worth something else if it's restructured. So I think the early iteration of the industry was caught up with a lot of excitement. It managed a regulatory arbitrage, or thought it had done so, and regulators have basically said, no, that's not the case. And now it's a question of how do you go through what traditional investors would say a legitimization process, so that the traditional investment community can access it and use it.
And is that happening right now?
Absolutely, but it's not a cohesive one industry structure. So there's, like all things, it's a market, it's a competition for ideas, and everyone's trying to solve this problem. Ultimately, for my mind, there was an inherent sort of missing of the traditional governance structures that have worked for hundreds, if not thousands of years, that are now being re-injected back into the process. And some companies will just focus on the KYC or the AML component. Others will talk about what's the legal framework, where it's nothing to do with tech. It's just how do you get the legal framework backing the tech to make it more commercial.
Interesting. And so I guess, one thing that I hear frequently is that, especially at the end of last year, when crypto was at its high, it was at its peak, everyone was really excited about it, people were saying this still needs to get closer toward mainstream adoption before this market can really be sustainable. Now, fast forward 12 months later, I think people are still saying the same thing. So how do we get to that point where all of this goes from a place like this, the Hong Kong Blockchain Summit, to something that's more mainstream and more widely accepted?
Well, I think businesses aren't built in a year. They take a lot of time to mature and grow and reach a stable point where they can accelerate the hockey stick. And there are still a lot of great teams and founders, entrepreneurs, and smart people out there building businesses which they believe can add value to the world and hopefully change users, whether that's enterprise or retail. And so I think if you believe in the technology and you believe in some of these teams that are out there building them, they will eventually come to fruition. But 1 year is a very short time frame for them to get there.
So what do you think is a more realistic time frame then?
Well, it depends business to business. If I'm building an exchange business, it takes me, I don't know, maybe 5–10 years to get enough users. If I'm building, file storage, maybe I can kickstart that with throwing some marketing dollars at it. It all varies, right?
But in terms of convergence, one can argue you're already there. I mean, if you cast your mind back, the innovation of Bitcoin, what was the true purpose for the innovation of Bitcoin? It was to be able to settlement amongst a group of friends and to not involve the banks. Okay, so disintermediation of banks, because they wanted a complete exclusion and separation from banks. Cast your mind back to where we are today. We've got Bitcoin futures, we've got banks and traditional guys already investing in this. So one could argue that Bitcoin, although you might question the value of Bitcoin, but the success of the technology and the ecosystem has been so great that Satoshi-san has failed, because actually convention businesses in the financial services sector is already coming in and actually being part and parcel of it. So I would argue that you've already got conversions there in any case. Not 100% conversions, but there is definitely convergence.
And I think most of the cryptocurrency or blockchain companies are in startup stage, and the number of it is very small compared to traditional business. And we have to remember that the failure rate of startup companies is almost 95%. So, I mean, if we look at the top 1,000 crypto, if 50 stays 5 years later, that's an achievement. So I think we have to give it a little bit more time.
And I mean, just to add to what Bonnie had said earlier, we have a bit of a mess actually using and having utility for a lot of the coins that we hold. You can't actually use them in anything. Other coins, for the companies that have issued coins, they have no real use within their business. They might have actual working business, but the coin has no utility within the business. So until we make that easier, the function easier, that it actually has real utility, it's going to take some time, honestly.
Well, along those lines, are you seeing any projects there where the coin actually has a true use case that people are using right now?
Not really. Just being honest, not really. That doesn't mean it can't come, but seeing more pre-existing businesses that actually have users that can potentially pick up and use this coin is definitely a positive and moving in the right direction. But right now, trying to get users to use your coin is through a kind of a pull method or push even. It's not working, right? If the most used applications are CryptoKitties or something like that, that's not going to be widely adopted. No offense to CryptoKitties, it's a fun game, but we need more than that if we're going to actually use and have a widely used asset class like crypto. So it's going to take time, but to see more institutions, more pre-existing businesses coming into the space, looking to tokenize an element of their business is reassuring in my mind.
It's also worth considering that there's a fundamental flaw in the design of cryptocurrencies in the early iterations. So there are evolving solutions that are more sophisticated and better suited to long-term survival, but if you think about this concept of this is a prepayment for service, how could any business operate on the basis that they have no idea what the value of this prepayment is worth a year from now? So this 80%, 90% collapse in a number of these coins has effectively meant there's 10% of the buying power that they had at the time they issued, which is not an intelligent way to structure a business. You add a layer of uncertainty that's entirely unnecessary, which is why, from our perspective as a financial group, we're interested in the question of whether it's sovereign cryptocurrencies or whether it's stable coins that evolve as the industry solution to this one problem, which is among many in the industry maturing.
And along the lines of stablecoins right now, obviously there's been a lot of controversy around Tether. There's been other stablecoins that have popped up, but Tether is still the most dominant. What are your views on Tether and how the stablecoin ecosystem needs to evolve from here?
With Tether, look, I'm not an expert in Tether by any stretch of the imagination, but of course any security that's role is to facilitate settlement within an ecosystem, then if there's fundamental questions about the solvency of that security, which is the debate that goes on in the media, to me it can't successfully achieve its function in the long term without resolving that issue. Stable coins to me are a logical evolution for the industry in that it gets rid of that volatility element, but what you need for that is an extremely transparent, highly trustworthy process where the market is utterly convinced that it's back. So I don't agree with the idea that you can have a cryptographically run tethered coin that the idea is that it will be somehow have its own cryptographic central bank. To me, it's extremely simple. Have some sort of fiat behind it, these tokens will have to have multiple fiat options available to offer utility on a global scale, and have real fiat sitting behind it in a way that the market is convinced that it's not just there, that it's verifiable in real time with an institution the market already trusts, and then that would be one problem solved.
Okay, so I guess I'm the only CPA and representative of the Big Four. Your answer about trust, actually our profession has got a big role to play on stablecoins. If it was the US Fed that had issued, not Tether, but the crypto US dollar, everybody would be happy because you can trust the Fed. So you can't trust Tether in the same way, so what do you need? You need something like a Big Four to be able to go and give some sort of the proper assurance or comfort over that type of token. Circle is probably one worth mentioning, where as it's not the Big Four, I think it's Grant Thornton. They're the ones that have most recently gone behind Circle. But I think the future is actually quite bright, because it is going to happen, because this community is going to demand it from the traditional accounting profession.
Just like to add two little points about Tether in particular. I mean, I think it's interesting that the only use case for Tether is to hedge against Bitcoin and other crypto volatility. So if you really want to have a stablecoin that's widely used, in the real world, you need something that you can actually use other than just hedging. And then point two would be, I think it's also funny that we've been trying to move away from fiat currencies, and now we're moving back to having it backed by fiat. So kind of defeats the purpose of decentralization in crypto to a certain extent. But I guess that's what the market demands. So.
Talking about the hedging, I have many experience about hedging in the traditional financial market. But in the cryptocurrency market assets, we find very difficult to hedge for hedging our position, because we have futures, yes, we have stable coin, but we don't have good ETFs, but we are on the way for that. And also the volume and the capacity is very limited, so you just can hedge like 10% of your portfolio. That's not going to be happening in the traditional market assets. So I found that maybe after like 1 or 2 years of regulations, so we will have more derivatives products and also the hedging tools for providing crypto hedge fund for doing their hedging jobs. So I believe this will attract more institutional investor to getting into the market, because it is all about the capacity of the current cryptocurrency market.
Yeah, and along those lines, I keep going back to the end of last year, because that's when this market was obviously the hottest. But at that time, people were saying that the wave of institutional money will be the next catalyst that propels this market. I think now people are still saying that, but we're also still waiting for that to happen. And so, when is this institutional money going to come, and what's going to prompt it to come to the market?
I think it's chicken and egg, right? I mean, like what Frank Liu said this morning. Companies have to show promises. Like a lot of crypto companies promise a lot of things, but nothing being delivered. Some companies raise $billions of dollars, but then there's no progress of what they're doing. Yeah. So I think until we see that kind of promises, that not until that, the institutional money will not come in. And when we look at the Bitcoin Cash drama recently, I mean, I cannot say that's manipulation, but there's a lot of like uncertainty in this market. If I were a big pension fund, or not even pension fund, like even a hedge fund, I may not get into this market when I look at that kind of abnormal movement in the prices.
And can we just, on that thought, can we go down the line here? Forks, good or bad, and why?
They're going to happen. We have to, it's a bit like saying you haven't got any choice. They're actually bad from a stability standpoint, but they're good in terms of the fact that if you have a real disagreement amongst the community and you've got two different opposing camps that need to go a different way, you have to have them. So I think they're bad for stability, but we have to accept they're going to happen.
Yeah, I think that it depends on the nature of the fork very much. Like, forks happen for a lot of different reasons. There are a lot of different parties that have different incentives and motivations. Like, to Duncan's point, it's good to have that healthy kind of debate in the market, but to mindlessly spend money for forks, or, there's been a lot of like public quotes and people saying a lot of things. I think that is unhealthy for the industry.
So I think forks are neither good nor bad, but they're a symptom of the problem, which is that it's, again, back to governance. If you think about these structures, if you have a consensus-based governance framework where no one owns or controls the process, by definition you're saying we either have to have gotten every question we could possibly conceive right at day one, or we fork. Or we get 51% of an incredibly large group of people to agree. Not so easy.
I think I would tend to agree with Duncan as well, and just kind of add, as long as it's not done by Australian Satoshi, then maybe they're a good thing. Just kidding. Kind of.
Yeah, I think this is a positive behavior for like Bitcoin Cash forming. It is positive to the crypto community because it is like a very innovative, very open, very technology-driven based community. So this behavior forming is like a very normal. I would say it is very positive to the futures of the cryptocurrency market.
Another thing we're all focused on is IPOs, so not ICOs, but initial public offerings. And 3 companies filed to go public in Hong Kong. 2 of them have let their applications lapsed. The last one is Bitmain. Albert, your firm, Kinetic, is an early investor in Bitmain. What's the deal, man?
I don't know where you got that information from. I think like those companies are very ambitious for sure, but regulators are not comfortable enough with their underlying business, especially with the applications that they filed. So it will take them a lot more time and internal gestation to come to the right governance and corporate structure to get past any listing board.
Yeah, but I guess as we think of this as a new asset class, IPOs would help propel that discussion forward, right? I mean, what needs to happen for other companies in this space that want to go public in the traditional markets? What do they need to do?
I think for sure there'll be plenty of IPOs from blockchain crypto space. If you just look at Coinbase, Robinhood, they all have large crypto components and likely to come to market very soon in the next 1 or 2 years. They are all very solid businesses, I'm sure, and if you see all, like Robinhood recently hired CFO just to prepare for their IPO, so it's only a matter of time.
Yeah, I mean, I think I would just add on that, I completely agree, Albert, just you actually need companies to build something, have some fundamentals behind them before you can actually value them properly. And even the ones that are supposedly the big guns in the space, you hear stories of them losing $100 million in a year, i.e. Consensus, for example, Galaxy Digital down 136 this year. So you have big players in the space who are well known, who are still burning cash significantly. So you need to continue to build up the ecosystem, actually have something fundamental that you can value, have revenues. I mean, I don't think a lot of the Consensus projects are even, they're all in the red, they're not revenue generating at all. So the ones that were supposed to spin out of this, not to point fingers at Consensus by any means, but the ones that are supposed to spin out of this big crypto boom haven't delivered anything, and until they start delivering something, why should they deserve to go public?
The other thing that I think one of the other panelists has already alluded to is we've got to be careful not to conflate form and substance. In that, at the end of the day, is cryptocurrency or security token or whatever we end up discussing, and however the industry evolves, is that an asset class or is it actually just a structure around which you access assets that already have a class structure?
Thoughts on ICOs, if there is a future for ICOs, or what's the next hot thing? I mean, are security token offerings really going to be the thing that's here to stay now? What's next? For the mic.
Okay, so I've worked on many ICOs as our firm has advised on many ICOs, but what do you mean by ICO? Is it a security token offering? Is it a utility token offering? Bitcoin itself, you can argue, was in the initial ones was an ICO. So be careful about what you mean by ICO and just labeling everything that was like a prepayment utility token as an ICO. ICO is a term that can be a little bit dangerous, and you need to be very careful about what you mean. So I think, yeah, there is a future for ICO security token offerings. You can either go, if you want to go and do an IPO on a one exchange fine. If you want to go and do a security token offering which has got global reach, global applicability in this community, fine, go ahead. But it could be the same underlying business, you've got two different routes. So I think there is a future for ICOs, security tokens, stable coins, the whole lot.
I would agree with that as well, and more on the utility token side, I still think there is a use for it. We're not going to see hundreds of millions of dollars raised for ICOs anymore, which is probably a good thing. Actually, definitely a good thing. If you take a stat that over 60% of the top 100 cryptos out there have no working product yet, that's a problem. A year on, or a year and a half on, or 2 years on. So to see more pre-existing businesses come into the space looking to tokenize an element of it, maybe they're selling equity, maybe they're selling tokens, maybe they're selling security tokens, whatever. You have a lot of different ways from a, advisor or kind of banker perspective of how to structure deals. And I think that makes it interesting for investors. You can have, the security of, an equity investment with a, utility token upside on top. So there's a lot of ways, and I think
from the hybrid structure is what you're saying.
Yeah, definitely. I mean, that being said, for the pure utility token offering, as a complement to traditional VC, I think it's definitely a good thing. That being said, right now retail market is definitely dead. That doesn't mean it can't come back in the future with a little bit more maturity, more regulation. I think there's been a lot of self-regulation in this space from KYC, AML processes for investing in ICOs, more utility token offerings, but there still needs to be more. And until that day comes, it'll still play a small role, but it'll still play a role.
I totally agree, because what I think is the major problem of ICO is the misalignment of interest between the investor and the developer. Because if I'm the developer, if I invest in venture company, the CEO cannot run away for 5 years unless they're successful or they got buyout or go IPO, right? But for an ICO investment, they list it on Binance, that's it, bye, see you, and then they start, maybe they'll take 6 months off first before they want to do anything else. So what I think is, utility token has a unique feature that can enable companies to do things that they cannot do before. For example, like low cost of user acquisition, incentivize the community. That definitely has some value. But what I think is, I think the established companies should look into it and then think of how they can utilize the utility token and create value for investors.
Definitely agree with Billy. I just want to add something real quick. I mean, when you looked at the big ICO boom, the people investing in it are speculators. They're not going to be the ones using the token. So if you have a utility token that's supposed to be used and have real utility, if the people are only trying to make a quick buck off of it, that's obviously not going to end well for anyone. Unless you're the one getting in at a deep, deep discount you can sell off and let the leak cutters, as they say, left hole in the bag. So that's a problem. So you don't necessarily need to raise funds through utility token offerings. You can airdrop them. There's a bunch of ways we can distribute them, gamify it, etc. So I think that plays into the ability to structure deals in a unique way. So you have security, you have your underlying assets that you can buy properly, securities, whatever, with some utility token upside on it. And I think that's an interesting way to move forward.
Yeah, I'm going to have to disagree with the whole panel here. So I just struggle to understand why we need a utility token. Because if we get to the fundamental reason why we're seeing innovation here, I think put aside the Bitcoin sort of no one controls it issue. For real world utility, it's effectively about smart contracts. It's the idea that people can agree a decision structure in advance and say, I'm legally bound that this is going to happen, you don't need my permission, it's designed into the code. What that means is today we have a world where we do all of these things, we sign paper documents and there's a back office that processes this thing. And what we're saying is we'll agree the process up front, automate it through the design, and then execute. You don't need a token for that. In fact, what would be ideal is to have one token that everyone uses, because we don't need the additional volatility. So I'm struggling to understand, and one of the questions earlier, I think you were saying that you're struggling for a utility token that actually has real value. Because we keep coming back to, what am I trying to achieve with this platform? And ultimately, all of them, if there's an economic transaction involved, need some form of settlement, which needs one token that can rule them all. Right? Why do I need if you think practically, why would I want to have 1,000 tokens for the 1,000 services that I consume? I just struggle with that idea.
Okay. Okay, a couple of things. I have to say I disagree with you. At the end of the day, if you've got a great business application and you want to put it onto a blockchain protocol, the last thing you want to have to do is to design your own blockchain protocol. So if you can go and actually get a token that gives you access to an already written and developed blockchain protocol, that's worth something, and that's like a prepayment, which is your utility token to and that's what's giving you access to something that's of value. You might have a business application that you want to design and put it on that blockchain protocol, and that is a real utility, and it's worth prepaying that through. So I think they have got value. So one last comment for me in terms of like, which I do agree with you on, in terms of like, if many of these tokens don't have any underlying value, or you said 95% of them fail. So if there is no intrinsic value or underlying business, what are you doing when you part with your cash or part with your ether to get that token? Are you investing or are you buying? When you go to Macau and go to the casino, whoever invests in casino chips, no, you buy a casino chip, okay? It's not because you're not investing in it. So it's the same thing on here, is that be careful about using the word investment because then that implies that there's an underlying business value underneath it.
Where are we in the global regulatory environment now when it comes to cryptocurrencies, tokens, ICOs? I mean, it seems like a lot of countries and regions have started to clamp down or put in place new rules. Some argue that that has had that's a big reason why crypto prices have fallen so much. Others say this is good for the maturity of the market long term. Where are we now? What do you guys think?
I think for sure it's a good thing. Like, all the regulators around the world, number one thing they're trying to do is protect people from scams and like people running away with $50 million and going to the beach, like, which is always a good thing. And there have been cases that's happened. So like, their number one concern is that, and it's good that they're looking out for the people in their whichever jurisdiction they're in, and it's a healthy thing for the whole industry. So it's to help the industry develop and mature and have better entrepreneurs and projects come out that are actually using the funds responsibly and held accountable and have better governance. It's necessary.
Let's say, I mean, you have tokens, so you trade on exchange. So I think regulated exchange is the way to go if we treat cryptocurrency as asset class. So I think Japan is doing really good at the moment. So they have legalized exchange, and also they are regulatory bodies, and they have formed an agreement with those exchange. They form a self-regulatory association. So that's called Japan Virtual Currency Exchange Association. So this association actually helping those not yet licensed exchange, provide them advice, and also they teach them how do you get the license. So I think this is very important. I mean, regulated exchange.
One thing I think we should consider is there's often this discussion that we need crypto regulation and that's what's going to help a lot of these issues. But I think we should remember that at least if you think about the guidance of an organisation like the SEC in the US, their view seems to be that basically every token is effectively a security. Arguably Bitcoin is classified as a commodity, but elsewhere pretty much everything seems to be a security. That logically adds up to me. Ultimately, if they're a security, we don't need new regulations, they exist. It's the industry that I work in, and they're actually quite good. I think regulators do a pretty good job, and to your point, it's just to say we just want to protect investors from getting scammed and to make sure that markets function efficiently. We have a very, very sophisticated set of rules that already exist. I don't think they need to change. I think the crypto community's learned, we just have to play by the rules.
I think one of the interesting developments in the last month or so, particularly in the US, was the SEC case against Airfox and Paragon, which they basically charged them for selling around $27 million worth of unregistered and unfiled securities. But I think they were a little bit hasty in prosecuting,